Credit reports. Wow, this is actually a very big and expansive topic, but due to time constraints and for the purposes of this video and because I don't want to completely bore you to tears, I'm going to give you a very general overview of how credit is viewed from a mortgage perspective. Credit history is one of the most important aspects in obtaining a mortgage loan. It's right up there with the big three that you've heard me say: credit, collateral, and capacity. There are generally minimum credit score requirements. Most of the banks and lending institutions require a minimum credit score of 620, and some are even higher at 640. Credit scoring has been around long enough now that I'm sure you have an idea of how it works. So I'm not going to go into great detail about credit scoring. Instead, what I'd like to talk about is how your credit history affects your overall mortgage application. Suffice to say, it's always best to know your credit history ahead of time, prior to shopping for a home. This way, if your score is lower than you'd like, we can take steps to correct any negatives before making your application and finding your dream home. So just to skim, there are three main credit repositories who hold all of the information of your credit file. I'm sure you've heard of them: EQUIFAX, TRANSUNION, and EXPERIAN. Each of these three repositories has a score for you, and you've heard them called Beacon score or FICO score. The score ranges typically run from 350 to 850. The higher the score, the better your credit profile is. Credit scores are based on 5 factors. 35% of the score is based on your payment history, 30% on the amount owed, your balances, 15% on how long you've had your credit, 10% on new credit being sought, your inquiries, and 10% on the types of credit that you have: credit cards, bank loans, student loans, or finance company loans. What your score does not reflect is your income, your down payment, any asset information, race, religion, health, driving record, criminal record, or political reference. In mortgage lending, as I said, most of your lending institutions and banks require a minimum credit score of at least a 620. Now bear in mind, that score is not only what they're looking at on your credit report. They're also looking at your credit history. They want to see exactly how you've paid your obligations. If you've had any late payments, if you've had any collections, if you've had any disputes, any bankruptcies, foreclosures in the past. They're also looking at your address and your employment history to make sure that those line up with what's written on your mortgage application. They're also looking at your credit depth. This means how much credit do you actually have? Do you have 2 or 3 trade lines, or 20 or 30 trade lines? And are your balances of your cards at the tippy top of your credit line, or do you keep your balances fairly low and manageable? Did you get a new credit card recently and run it up to the max right away? Did you get a new car? Do you get a new car every year, or do you shop at Rooms to Go every year? Here's an important one. Who's pulled a credit report on you in the last 3 months? These are called inquiries, and they will actually want you to write a letter explaining them. The key that they're looking for is to see if you've gone out and opened up any new credit in the last few months. Obviously, if Lowe's has pulled a credit report on you lately, and if you have received a new credit card from them, then that means that there's going to be another payment that they need to take into consideration when doing your underwriting. It's all very logical, and it makes perfect sense if you look at it from the lender's standpoint. Other things that are briefly on your credit report are things like bankruptcies, foreclosures. They'll stay there for 10 years. Most lenders will consider granting a mortgage after 4 years as long as you've reestablished your credit. Some lenders or programs will allow less than 4 years with documented extenuating circumstances, but the norm is about 4 years. Collection accounts. In many cases, we will have to pay those off. However, sometimes on the government loans, like an FHA, they will allow them to stay open, again, depending upon the circumstances. Judgments. Almost always, judgments must be paid off, as this is something that could potentially cloud the title to your property. If you've had credit problems, be prepared to discuss them honestly with your mortgage professional, who is going to assist you in writing your letter of explanation. Knowledgeable mortgage professionals know there can be legitimate reasons for credit problems, such as unemployment, illness, or other financial difficulties. If you have had problems that have been corrected and you've reestablished your credit and your payments have been on time for a year or more, your credit may just be considered satisfactory. The best thing is if you have had some credit problems, be prepared to discuss them honestly with us, and we will assist you in writing your letter of explanation. Again, the best thing is to be open with us. As I said, credit is a very interesting and very vast topic. I invite you to please read more on the library portion of our website to get more information.